Global markets are mixed ahead of key US inflation data tonight. Oil slumps below $70 a barrel after a demand forecast downgrade. China's exports jump, but sluggish imports highlight their soft domestic demand. And Australia's stage 3 tax cuts do little to spur business or consumer confidence. That's coming up in our 5 Things in 5 minutes. And then in part 2 of a bonus deep dive interview with Australia's Group of 8 University CEO Vicky Thompson at the ANZ-sponsored AFR Asia Summit, Vicky explains why Australia's universities believe there are other options to the new international student cap being proposed.
We are taking our own action in terms of limiting and capping and diversifying in particular courses. And we're starting to see a drop-off anyway in terms of student numbers back to a more moderate level.
But first, in 5 and 5 with ANZ. Markets are mixed this morning ahead of monthly CPI inflation data in the US. US stocks, though, wobbled, and US Treasury yields fell 5 to 6 basis points. But the big mover was oil. Brent crude fell 4% to $68.91 a barrel by 4 a.m. Sydney-Melbourne time. That's his first time under $70 a barrel since December 2021. And followed OPEC downgrading its forecast for global oil demand to just on 2 million barrels a day from 2.1 million previously. But stocks, bonds and currencies are most nervously awaiting US inflation data tonight. ANZ senior economist Tom Kenny is expecting core inflation of 0.2% for the month of August and an annual rate of 3.2% for the year, with a broader disinflation trend continuing.
We expect to see goods price deflation, services ex-rent to be slowing in a trend sense in line with softer wages growth. And after surprising to the upside in July by accelerating, we expect to see rent inflation soften. Powell and Fed officials have in recent times expressed greater confidence in inflation heading back to 2% sustainably. And we think this means that the Fed can kick off its easing cycle at the upcoming September FOMC meeting.
In currencies news, as of 4 a.m. Sydney-Melbourne time, the US dollar index is up 0.1%, the Australian dollar down 0.04% at 66.57 US cents, and the New Zealand dollar up 0.16% at 61.53. Number 2, Australian businesses are not feeling the spending love from stage 3 tax cuts, with NAB's monthly confidence measure falling to a -4 last month, which ANZ economist Maddie Dunk says is its lowest since November last year.
There was no sign that those stage 3 tax cuts were having any impact on how businesses were feeling about the outlook for the economy. So I think we were surprised at how weak business confidence was in that August SNAP report, because anecdotally, what I've heard from particularly retailers is that they are feeling a bit more optimistic about the outlook. They're expecting that spending will lift in the second half of the year.
Number 3, it's much the same for Australian consumers. Maddie says the ANZ Roy Morgan Consumer Confidence Measure fell slightly again last week, with drops in how households view the economy in 12 months and 5 years' time.
We're still seeing that consumer confidence amongst those people paying off a home loan is lower than the other 2 groups, so renters and then those people that own their home outright. And the RBA have been very hawkish in their rhetoric recently. Michelle Bullock last week really, I think, drilled down on this idea that it is possible we see another increase in interest rates here in Australia. Now, that's not our view at ANZ, but the RBA has been very strong in their language there.
Number 4, there's some good news finally for China's economy. Exports in August rose 9% from a year ago to their highest level since 2022. However, imports rose just 0.5%, further evidence of weak domestic consumption. ANZ senior China strategist Xiaopeng Jing says one problem authorities face domestically is that Chinese households are focused on paying down their mortgages instead of spending.
The household priority is to prepay their mortgage, not to consume. We estimate that Chinese household prepay almost 600 billion yuan every month. It's equivalent to 10% of retail sales or 15% of their disposable income. I don't think households have a lot of free cash flow to spend consumption.
Number 5. In New Zealand, manufacturing volumes, a key input for GDP next week, rose 0.6% in the second quarter. ANZ economist Henry Russell says there was more strength in the data than leading indicators such as manufacturing PMIs and others have recently suggested.
Those indicators were a key aspect of the Reserve Bank's decision to cut the OCR in August, as they drove a significant downgrade to the Reserve Bank's economic outlook. And with all the GDP partial data in the bag, it does look like the risks are tilted to a stronger print next week than what the Reserve Bank had expected expected in August. But that being said, there's plenty of scope for a surprise on the day in either direction.
Henry Russell there. Now, on part 2 of a bonus deep dive interview from the ANZ-sponsored AFR Asia Summit, Australia's Group of 8 Universities CEO Vicky Thompson has some alternatives on how to deal with Australia's international student cap.
So at best, we would like to see a delay so that we can have a discussion and look at what 2025 will actually bring. And then if we are looking at some sort of pulling back on numbers, we actually have all the facts in front of us, because at the moment we don't. We're wrapped up in a political migration debate, no more, no less.
And you mentioned a more than doubling of non-refundable visa fees. What impact does that have on the likely source of international students?
Well, this is the perverse nature of this policy. So if you look at a $1,600 non-refundable visa fee, that is pretty expensive for students. And so if the government is wanting us to diversify, and we're up for that, absolutely, it's a good thing to have a diverse student cohort and diverse research partnerships. But the very people who can afford a $1,600 visa fee are probably from the one source market where they're wanting us to diversify from. And if they're wanting us to actually attract students from other countries, particularly in the ASEAN region, those students can't afford a $1,600, I hope I get a visa. They just can't afford it. So there are unintended consequences, I'll be generous, to actually increasing the visa fees, where the only people who will be able to afford it is a particular cohort of students from, in this case, China.
So if there were no caps, how big could this industry get? How fast could it grow? And how much capacity have the universities got?
So it's a great question, because that really is the nub of the issue. How much is too much? Where do you start to tip over in your social licence to operate? What proportion of students should you have at your public universities that are international and domestic? They're really important discussion points that we would like to have with the government to actually look at what should our international sector look like. This isn't going to deliver that. This is just a blunt cap. And I can tell you that all of the universities that I represent, they are not just looking at this now. We've been looking at this for some time. But it is a demand-driven system, and the demand will come, and it does, into the major cities of Australia, Sydney and Melbourne. You can't tell a tourist, sorry, you can't come to Sydney or Melbourne, we'd like you to go to, Kununurra, as lovely as Kununurra might be. Similarly, our students want to come to Sydney and Melbourne. So that's where you see the pressure points, more so than, say, Western Australia or South Australia, or even to a lesser extent, Queensland. So it's not a one-size-fits-all. Our universities are not growing for growing's sake. We are taking our own action in terms of limiting and capping and diversifying in particular courses. And we're starting to see a drop-off anyway in terms of student numbers to back to a more moderate level. So caps won't deliver that. Caps are just, to us, very much a political tool for both sides of politicians it's a race to the bottom in terms of migration.
What other ways are there that aren't so blunt, that achieve what the universities want?
So what we've said to government is getting a little techie or a bit sort of detailed on legislation here, but amend the legislation so that you have a discussion with each individual university. There's only 39 of us, so there's not that many. You have that anyway through our financial agreements that we have, our institutional agreements. And you say to each university, okay, UNSW, here's your profile, here's what we think, how's that working out for you, which will be very different to the profile at, say, the University of Western Australia. So it's not a one-size-fits-all, it's an institutional profile, and it takes into account the pressures and the diversity and the attractiveness of particular cities to particular cohorts of students. We don't think that's really that complicated or hard to do, but to this point, government has not agreed to that.
In the debate on housing capacity, you say the criticism that there aren't enough houses for students isn't valid. Do universities do much as institutions to increase housing supply and ensure there's enough places to live affordably?
Yeah, we do. We do a lot. So across the universities that I represent, we've got, I think, around about roughly 85,000 beds. And that won't house all of our students, but it houses a significant proportion of students. Again, going to my point of not one size fits all, in South Australia, I know there, the University of Adelaide, for example, have just commissioned to build another 700 beds, but they actually can't fill all those beds. So there's excess supply there. So we've got skin in the game.
Vicky Thompson there, the CEO of the Group of 8 Universities. I'm Bernard Hickey. That was 5 and 5 with ANZ for Wednesday, September the 11th. Catch you tomorrow with a review of those all-important US inflation figures, the last numbers before the Fed's decision next week. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.